Snowdens and the Guggenheims of the world. Are you, at least from Carlton's perspective, do you take your own deals down? Are you using traditional bank lines, or are you taking money from the portals and kind of recycling it if there are any gains? How are you financing the takedowns of various projects that you then syndicate?
Well, we do the takedown in traditional fashion. We go out, we get our own debt, because remember, all of our deals are our own deals. They're Carlton as the principal. So we go out traditionally, we get our debt, and then on our equity piece, let's just say it's 30% of the overall capital stack. We'll put in between 10 and 20% of that, and then the remaining part we just get through our crowdfunding. However, we already have partners out there that if there was some type of shortfall, that they would come in and be part of a part of the GP in that particular case. But
do you have a right to call on them, or are they an option for you?
It's always an option for us. They're always available because, for the most part, they always want to be part of our GP on any investments we do because of our structure and our underwriting criteria. Because it goes back to everything else where there's trust and there's an ability to have partnerships in real estate. Our underwriting is very, very, I don't want to say unique, but we're very conservative at our underwriting. And as you can see on our portal, we right up front, we let everybody know what their current pay yields are. We also let you know what your range of your IRRs are. So we're pretty upfront about everything that there is to know about that transaction. And we're pretty much comfortable with our levels of equity that we're looking for, whether it's through the portal or whether it's through our traditional basis of going to our partners.
Terrific. Stefano, on your end of things, is there a concern at all where these various folks house their servers and the cybersecurity? What do you recommend to make sure that there's enough redundancy and protection? Because obviously, everyone self-admittedly is we're real estate people, we're not tech people. How do we know what the best practice would be to make sure that we have a continuation of our service and that the investing public can feel comfortable that we'll be locked out?
I think one thing that people overlook is you not only have to look at the platform itself, you also have to look at what vendors they use, for example. So what we've done to ensure security, data security, is to partner up with the best companies that are much bigger than us, that have been there for a really long time, that banks and broker-dealers and investment advisors use. So we partner with them, and one thing that we do is try to ensure that the data doesn't touch your servers. So that's one thing that we're very careful is that personal PII, personally identifiable information, won't touch your servers. We rely on much bigger and capable third parties, like bigger firms to do that.
In the cloud or physically?
They're all in the cloud. So our service we keep as little as we can, we possibly can, and we also have we're actually engaging a third party audit firm, and someone will help us with testing and recommendation, so we can help always keep improving that front. I think that's that's one of the most important things we have to offer.
But so you don't believe that physical servers play a role? Because I've seen other folks who have California, Asia, Europe, everything is set up so there's a lot of redundancy going on in case there was a black swan.
I mean, I know that the CIA uses Amazon servers. I don't see why we have to get our own. The cloud
because you don't want to be on the same one as the CIA.
WikiLeaks.
Snowden's going to be investigating soon. Let me ask which of you, clearly there's no need for a registered investment advisor designation in the case of Carlton because they're selling their own things. What about the other folks here? We know that Realty Mobile is not an RIA. What about you over at Fundrise, Brandon?
No, we're not.
All right, but you are, your licenses, you have real estate people, you have mortgage brokerage licenses, or is it pretty much just your real estate you're operating and you're using broker dealers like Gulf Forge or whomever to drive your site?
We worked with several broker-dealers in the past, but today we operate as a listing platform, so we're not currently broker-dealer.
Yeah. And then what about you, Rishi? How's your back office work and on the BD side?
Yeah, sure. We're outsourcing our broker-dealer work, but we're in the process of bringing that in-house. We've actually submitted our application because we just find more efficiencies to managing that process internally ourselves.
What do you, Scott?
You know, I've got a sincere problem with the whole thing. You know, I don't understand how a broker-dealer in America can help a sophisticated accredited investor from South Africa make a decision about investing in, you know, Manhattan or Sydney. I see them adding zero value and just being another piece of fees along the path. And because of that, we've got a lot of kickback from a legal perspective and the compliance perspective. But I think it's also very important that we want to deal with partners that add value to the transaction and not people that are part of the 20th century that are just taking up points along the way and having zero value. And if someone in this room can explain to me how a broker-dealer can add value to one of my investors in South Africa when they're investing somewhere else, I don't understand.
Anybody want to take that question? Go ahead.
I'm not going to take that on my question, but I wanted to say, even on our platform, we find tremendous value in the broker-dealer community. You know, we've aligned ourselves now with a few, and it's just opened up the investor base that much more. Because again, it's an alternative investment for some of those investors that are at the broker-dealer. So if they're interested in real estate, it now gives them an opportunity to see our transactions, whether it's through the portal communication or whether it's a phone call. But again, without that broker-dealer, that's just that many more family offices or individuals that we're not touching.
To ratify that, we got no problem working with broker-dealers. Right. And if they've got relationships there, then they're bringing value to the table. But I've already been helping a guy invest for the last 10 years in sophisticated investments, and he's an accredited investor. Why must I now suddenly be told that I must have someone in the middle telling me whether it's a good investment or not? It makes no sense. So it's two sides of the fence. On the one side of the fence, we want to partner with anyone that can add value. But I'm not going to be told just to spend money for nothing because of some regulation that was based in the 20th century.
Okay. I want you to go ahead and give your card for the litigation. That's
good business, Jeff.
Just. Out of Pia, do you guys even use broker dealers, or do you take advantage of the loan exemptions?
Well, we're also affiliated with WealthForge, and some of our executives are currently in the process of getting their the 7, 63, or the 82, all those that are required.
63 is enough.
Whichever they are. I have to do a different version because I'm Canadian. I have my security score, so I have to do something different. But regardless, we do have them as an option, but up until now we haven't used them. But they do offer a different level of compliance as well, which is I think what the point is that you're getting a different level of compliance. They're registered with FINRA, and everything that we're doing, none of us is trying to not be regulated. I mean, it's so important. We're dealing with securities and money. And I think that's the purpose of them.
Absolutely. Anybody want to take issue with anything that's been said up here? Yeah. Scott?
Can I just, yeah. I think there's one last thing that I think people need to be aware of as well. They've spoken a lot about the curation. Dolph mentioned it, but I'm not sure people are aware of how important it is. But if you take the Global Wealth Index, the US dollar has lost 72% over the last couple of years. And so, you know, you need to take an account as to what that means to your global wealth. And again, when you're comparing one asset or one investment to another, you need to understand the impact that has. And so, you know, you come back to curation, but for us, it's not just about a specific asset, but what is it, the bigger picture and what is happening globally. And you know, the currency risk and what's happening, you know, in the bigger picture is very important. And you come back to broker dealers. Broker dealers are essential. We have no intention of trying to deviate or break the rules. But what people need to also understand is it's one thing to comply with American legislation, but how do you comply with America? It's not just America. The world is global. You know, you've got South Africa, you've got Australia, you've got Singapore, and everything is different, believe it or not. Even though we all supposedly speak the same language, we're not. My belief is that in the next couple of years that will all come together, where we'll kind of have one system that will be there to protect people. And it won't just be there to protect investors, because personally I think there's going to need to be an accreditation of crowdfunding platforms to make sure that they know what they're doing and actually helping people invest in the right things.
I think that's a grand vision, the idea that the countries would all come together like a Basel Accord or something, but I don't think that's realistic at this point. So I think the frustration that you're feeling right now, this is just me, I'm not the guy there, but I'm not on your panel, but the frustration you're feeling is something you're just gonna have to deal with. And
100%. But I mean, Steve Jobs in 1977 said one day we'll have a digital book.
Right.
And you know, now we have the iPad, and if we're not very clear on where the future is, we're not
the
going to
problem is Steve Jobs didn't say one day we'll have a global fraud.
Right.
And
Global fraud.
Yeah, that's the big issue, is that if something happened and it was wrong for everyone, it's wrong for everyone. Each nation is going to want to compete just like we do with their rule of law. And America, the reason all this money came to America, even though we had a big crunch, is because wherever anybody makes money, they migrate it here because they know the courts work and they know that there's regulation. And so I hate the regulation, I'm with you, but I love the regulation because it's the work. It may be a bad system, but it's the best system that there is.
You're 100% correct. And remember, I said to you that the emerging world wants to invest in the first world because they protect it from a legal perspective. I agree with you 100%. And you know, as a South African, I'd far rather have my money sitting in America than in South Africa. But saying that, that's in the long term. In the short term, we can get far better returns locally than we can get them in the first world. You know, and you only got to look at Europe. You know, 30 years ago, no one would have thought that the Italians and the Germans or the French would all be working under one European Union. So
French work.
Just if I can add one thing though, with respect to the broker dealers, I mean, what I've learned in my, semi extensive career in real estate is that it's a pretty local business. So sitting in South Africa, it's probably challenging to find access to good deal flow. So if you're working with a broker dealer that's not providing that or any added layer of service or vetting of the sponsor or the market, then I think that that's probably a useless broker dealer, and I agree with you. But I'm not sure, I've never met any global investors that don't want to work with someone local.
Oh no, 100%. We work with local people. It's literally, for us, if you don't have someone local, you're going to, you will fail, it's guaranteed. So please don't take that. But what I don't, there's a big difference between someone who's been in a real estate investment space. As an example, we're investing in Atlanta right now in a medical space. The guy's been doing medical for 20 years. He's not a broker dealer, but trust me, he knows about that investment better than any broker dealer on the planet.
Sure. If you have access to those guys, then that's absolutely, you should absolutely invest out of them. I think we're providing a level of accessibility, and we're using online mediums, and the law mandates that you have to be, you have to work within the confines of the law. And one of the issues that we face is that we need to be affiliated with a funding portal or broker dealer.
Great, 100%.
Questions from the audience? We have a little bit of time. You guys ready? Okay. Here's where it's the Crossfire. Go ahead.
So some industries have begun implementing automated underwriting, but it seems like everyone's saying this is a finance business. Eventually, when this catches on, there's going to be so much deal flow. Are you guys just planning to hire more underwriters, or is the technology going to advance where it does become a technology business and there is automated underwriting? Because that's like a,
Well, that's the holy grail.
When the flood comes, how's everyone going to handle it? Because it's going to come.
What are you spending your money on? You just got you just got a bunch of money. What are you spending?
No, that's I think number one, human capital right now, because we need to build a business. Number two, compliance. But we are also building a robust credit algorithm for our debt business. I think if you've worked at a bank or taken a loan out from a bank, traditional bank is going to outsource a lot of the diligence to a Citus, to a Duff & Phelps. There's a number of providers. What they're doing is they're sending a stack of files to somebody with a list and saying, check the box that these documents exist. They're not verifying the accuracy of what's written in them. They're not verifying. Through OCR technology, you can actually do that technologically. So on the credit side and on the loan side, where you are taking a security interest in the underlying mortgage, we are looking for ways to enhance that. We talk about it a lot on the equity side, but it's much more difficult to automate the equity underwriting because that's more of an art form than it is a formulaic process. But we found that on the debt side, we have found ways to expedite and use technology to underwrite and provide credit algorithms.
Pia, I interrupted you.
No, it's okay. We don't have the money yet. It's coming. It's really. It's actually really a balance. Even on the credit side, there's always going to have to be a certain level of oversight. Even when you're underwriting that asset in an area, in a community, it can be on the other side of the tracks. Maybe to a degree, a lot of data can tell you that, but it's not ever going to replace a lot of human experience as well. So we're building a very robust due diligence engine. You know, a lot of people talk about data, but it's the context of the data. It's knowing which data points are actually valid. That is going to make a big difference in how this is done. But it's going to be a lot of technology, data, but also with a lot of that final human oversight and that human touch. And we still negotiate personally. Our underwriters are on the phone. They're closing those deals on the phone at the end of the day.
They say that underwriting real estate is similar to massage. It requires hands-on.
I wanted to ask if you provide marketing support for sponsors listing on your platforms, and if so, what form that takes? Either of which of you, Richie and Brent.
The question is, do we provide marketing support?
Yes, so up sponsor funds and list something on your platform, how do you get the word out? Do you get the word out? Is it coming with the sponsor to your site at the same time?
Yeah, so we have various online marketing strategies. I mean, one of our marquee deals was the Hard Rock in Palm Springs. We raised about $1.5 million of equity from that capital stack. And we had, the week we launched, or actually the month we launched, we had 100 million impressions online, which was that same month, the same number of impressions that Pepsi.com had. So, you know, essentially what we're able to do is we're able to turn a sponsor's business into a household name, which historically has not been the case in real estate, no matter how much they transact.
So are you using online social media tools to do that?
Yes, yes. I'm not a marketing guru, so I will disclose that up front, but
it's
yes,
part of
our
business.
marketing person says a lot of stuff that I don't really understand, but I'm sure. No, I'm being serious.
How about you, Brent?
Yeah, I mean, I think one of the reasons you come to a platform or a marketplace is the idea that you as an individual sponsor can only access so many people. If you post your deal on the platform, you're immediately in front of 20,000 investors. So right there, that's a decent amount of marketing. On top of that, every sponsor on the platform